Welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing. And I've been making, I think, 4 or 5 videos up to this point about the most anticipated earnings releases for the upcoming week. And video after video, I'm like, wow, there's still more companies that are interesting that still have to report. So taking a look at this Monday, we have nothing too crazy. We have Oatly, which I believe they make oat milk. I recently went IPO. I'm not too interested in that one, as well as Butterfly. And this one was, I believe, a SPAC once upon a time in 2020. And I think ARK Invest was also buying into them as well. What I believe this company was when it came to ultrasounds and innovation in that sense, but it got really hyped up and then it went all the way back down. I actually have the chart over here. If we look at the last, let's say 1 year, we see that during the time that everything that was momentum and hyper growth driven got dumped in February, and since then that high back at $27, we are down 68%. So definitely not a name that I was very interested in, and still am not that interested in. So taking a look after the close, we have Lucid Motors, and this is a stock that has done pretty well over the last month or so, let's say, where it was trading around $24 for most of September and October, and then climbing up at the end of October from $26 all the way up to where it is now, up 66% to $44 per year. After the close as well, we have Ideanomics, and I know that company was also very retail driven as well, but I believe it was also trash, kind of just like Butterfly was. So I'm not really interested in that one, as well as Desktop Metal, which is a company I am pretty interested in over the next few years, as they are in the 3D printing game. And I think they have a lot of potential over the upcoming few years. This one also got dumped from about $30 all the way to where it is now, down 72%. However, this one I think has some nice prospects as well. Over the past month, it had a nice little bump up from where it was trading around $7 to where it is now at $8.61, up 23%. Taking a look at Tuesday is when we get some big box retailer names. So we have Walmart and Home Depot. And Walmart for this one has actually been trading pretty much sideways for the past year, around $150 and as low as the high 120, so 127, 128, 129. And looking at the last 5 years, this one has gone up 115%, so it has doubled. And looking at the max chart, this is one that is a long-term wealth generator. We all know Walmart. They're going to continue growing over the upcoming years. Pays a 1.49% dividend yearly, and even though right now they're consolidating, I'm pretty sure that they're going to continue on this trend over the next 2, 3, 5, 10, 15 years. Walmart isn't going anywhere. Also looking at Home Depot, similar kind of story. This one was also a wealth generator over the last 5 years, going up almost 3x to 190%. And looking at the all-time as well, same kind of idea. This one's a growth monster, even more so than Walmart in my opinion, and also pays a dividend yield of 1.77%. Also looking as well, before the open, we also have C Limited and Jumia, one of those companies that you feel like you just missed the boat and just goes higher and higher. Over the past year, up 91.5%. Over the last 5 years, up almost 2,000%. And ever since the market crash back in March of 2020, this one has just gone straight up 657%. And for those that aren't aware, this is like the East Asia, Singapore version of Amazon. And similarly as well, Jumia is like the African version of Amazon and e-commerce and whatnot. And this company I don't know much about. It's not talked about that much, but it has a market cap of $1.69 billion, whereas C Limited has a $188 billion valuation. And this one over the last year hasn't been doing that great, especially since that February peak. However, it still is up 22% on the past year. That sums up my interest on companies that report on Tuesday. Looking at Wednesday before the open, we have Target, which has done very, very well under the radar over the past year. It's up 57.42%. I mean, we all would like a 57% return over 1 year, and Target has done that. Just now a market cap of $126.9 billion with a dividend yield of 1.38%. And we also have Baidu reporting as well, and are going to be releasing this weekend. If I haven't already, I haven't recorded the video yet, but it depends on when I release it. Chinese tech, I want to talk about them: Alibaba, Baidu, JD.com, Tencent. So this one peaked out in February at $340, and now is trading at half of that at $170, with a market cap of $59.37 billion. As well, another retailer, we have Lowe's, and this one has also on the sneak been doing very well as well, up 45.97% over the past year, with a market cap of $166 billion and the 1.35% dividend yield. But it's after the close on Wednesday where we have a very big name of the S&P 500, NVDA, which has had an absolute crazy 2021. And looking at that chart over the past year, it has gone up 124%. And if there's one lesson I learned from the stock market over the past year and a half since I've been stock investing, is don't get in front of a train that is going to run you over. Things that come up when I think of those trains are NVIDIA and Tesla. It now holds a market cap of $759 billion. I have no idea how much juice is left in this lemon, especially in the short term when it comes to valuation. Long term, this one is a winner, but in the short term to medium term, with the short supply and the chip shortages and the valuations, there's a lot of factors that you have to take into consideration when you think about buying NVIDIA for the long term, whether right now is the best time or to nibble into your position or whatnot. So their earnings are going to be interesting, as well as Cisco. When it comes to Cisco, I always like to pull up the max chart of the dot-com bubble and how we still haven't gotten to those same valuations. It still hasn't reached the same market cap that it reached during the euphoria of the dot-com bubble. And eventually, maybe it will, and I will be the first person to talk about it on my YouTube channel when that happens. But whenever I have to talk about it, I have to show this chart. They also report on Wednesday afternoon a market cap of $239.65 billion with a dividend yield of 2.6%. And the one more very interesting play that we have this week is on Thursday morning, Alibaba. And this stock, oh man, it's now trading at $166.81 per share. And if we look at the last 5 years, this one peaked just over a year ago at just over $300 per share. And it's trading well below that now, down 45%. Wow. It has a market cap of $453 billion. And if it wasn't for all the fear, uncertainty, and doubt of the regulations in China and their crackdown on big technology companies, this would be trading a lot higher, probably at $1 trillion or so, but I mean, who knows? So similar situation to Baidu, we also have Macy's, and this one also surprised me when I looked at the stock price at $30.46. So over the last few months, it's done very well. Since the end of August, I was at $18, now trading at $30. And this one was like $10 like a year ago. Yeah, I was trading at $8, $9, $10, and Chris Sayin on YouTube kept talking about it, and I guess he knew what he was talking about because it's now up 279% over the past year. We also have JD.com, which is in a similar situation as Alibaba and as Baidu. We have Applied Materials, and they're similar to ASML, which is a company that I'm invested in when it comes to semiconductor manufacturing equipment. You have Intuit, which I believe is a surgical company. I don't know much about them. And Palo Alto, which is a security company, I believe, out of California. I don't know much about them either. And taking a look at Friday, the one interesting name, I know this one usually does report on a Friday for some reason, and that's just something I've noticed, is that Foot Locker, looking at the max chart for this one, it was trading as low, I remember, as $20, and then this one climbed up, I remember, all the way up to a peak of 63, and right now it's on the down again. This is a very cyclical stock for some reason. It has a $5.7 billion market cap with a dividend yield of 2.18%. Until I see some kind of direction change in this company, it just doesn't make me want to look at them or believe in them for whatever reason. Let me know in the comments below if you are in Foot Locker stock or any of the companies that are reporting this week. Let me know in the comments. As always, subscribe and like, and I will see you in tomorrow's video.